Paul always suspected King Crab was more of a title than a name. And he wants to be the first human to bend the claw. Because one day, the crustaceans will rise, and only Paul will be spared. Foresight's a wonderful thing. Invest in innovation, including 3D printing, with Opto.
Hello everyone, and welcome to a special episode of Opto Sessions. Today I have the pleasure of introducing two distinguished guests, Anthony Scaramucci, founder and managing partner at SkyBridge Capital, and Dan Tapiero, founder, CEO, CIO, and managing partner of 10T Holdings and One Round Table Partners. How are you both doing today, guys?
Doing great. Thanks for having me on. Good to be here with you.
Nice to be here.
We're going to have a discussion about digital assets, among other things. We'll explore the current macro environment, its impact on digital assets, how to incorporate digital assets into your portfolio, and the potential of the exponential age, among other things. But let's start with the broader picture and then discuss some potential short-term scenarios. Anthony, I thought we could start with yourself. Do you believe digital assets present one of the biggest opportunities of all time, and why?
Well, I mean, there are lots of different opportunities. Obviously, with a hindsight test, Bitcoin is the greatest asset I think that I have seen in my lifetime. I'm sure Dan would agree with me. It could be the greatest asset in history as far as I'm aware of. I guess the real question is, from this point going forward, where are we? And I'm in the opinion, I think Dan shares this with me, that we're a 10x from here. I'm not going to cap a time frame on that because it's very uncertain. There's some volatility, but if you look at adoption rates, and Mr. Tapiero has some wonderful slides that he sometimes shows people about where adoption rates were. Last year, he had us in 1998 in terms of the comparison to Web 1. So I'm assuming we're probably mid 1999 now. It's only a 5-ish% adoption for Bitcoin. And so just imagine if we can get to 20 or 30%. Yeah, greatest asset in history, let's say from 2009 to today. But now the question is this going to outpace NVIDIA and other great assets? I believe it will. And obviously, I've staked my reputation and my business on it.
Dan, what about yourself?
Yeah, I don't know. I don't really know enough about NVIDIA or AI to compare it to that exactly. I think at some point they become integrated, but that's a whole other conversation. Look, I think everything changed in the summer. The Larry Fink comments that Bitcoin was a global asset, an important global asset, was a big change from what he'd been saying 2 years previously, that Bitcoin was for fraud and money laundering. $10 trillion wealth manager, we all know about it. And of course, he didn't say those comments without knowing, in fact, that there was going to be an ETF and that they were going to be one of the big sponsors. So January 11th, all 11 of those ETFs came out. And that's really been a game changer. If you think about looking forward, going forward, you've basically onboarded around $50 to $100 trillion of available capital through equity accounts and brokerage accounts around the world to Bitcoin. I mean, previously you needed to set up a Coinbase account or Kraken or Gemini. Some people weren't really comfortable with that. The entire over age 50 crew, they all have stock accounts. They all have brokers, RIAs. And now they just, can push a button and they own Bitcoin. And so we thought that would be powerful, but it's been a lot more powerful in terms of how it's affected people's mentality in the space. And I tell you this firsthand experience because we have never marketed our funds. We have 1.4 billion AUM now in the 10T1RT funds. Never marketed directly to U.S. institutions. We have 2 or 3 institutions, but they're through personal contacts of mine. Texas Teachers is a big investor, as is Michigan's pension fund, MERS. But we've never marketed to them. For the first time since I had the idea for this fund in the middle of 2019, New York-based financial institutions are interested in talking to me about what we do. And it's very, very interesting. I never had that kind of reverse inquiry. And remarkably, they're actually starting to move quickly, which is almost an oxymoron, a U.S. Institution moving quickly. They get the ETF. They get the interest that their clients are showing through the ETF. And as you may or may not know, we are the only growth equity fund in the world that's exclusively focused on crypto, blockchain, Web3, digital assets. And so they understand equity and private equity. And so the companies we invest in, they're more developed. They're making $40 to $50 million, I would say minimum for the most part in revenue. It's not really venture. Last thing I'll say is that, Bitcoin and Ethereum, I think, are established assets. They're core assets. That's why they will have ETFs. I think the Ethereum ETF is also a big part of the future. The other cryptocurrencies, they're more venture projects. They're more speculative. I think Solana is maybe moving towards becoming a core asset, but it's not there yet. So I'm very bullish when the slowest part of our world, this U.S. institutional world that has been slowest to the game, they're starting now to pick up interest, and I'm seeing it firsthand. I don't know, Anthony, if you've been seeing it. You're sitting there in New York all the time. I'm in Greenwich, a little outside normally, or in, as I mentioned before, Dorado. No.
Well, yeah. I mean, listen. I think the big thing, Ed, that you need to know from my vantage point is that there's a selling machine that's revved up. Dan and I have been combined on Wall Street for almost 80 years. We sound like a presidential candidate when we say that, but it's a selling machine. Wall Street is this major mechanized selling. And what we are now starting to see is that revving of that engine. So that means BlackRock's got consultants out there telling people they have to own Bitcoin. FAs are out there telling their clients they have to own Bitcoin. Fidelity's doing the same thing. There are other vendors that are got their wholesalers out there doing that. And I would love to hear Dan's take on this, but I think the state of Wisconsin announcing that they've got $160 million in Bitcoin is very seminal. From a Wall Street perspective, let me explain why. State of Wisconsin has said to themselves, okay, Bitcoin is an asset class. I've got to get it in my tactical and strategic asset allocation mix. It's got to be part of my pie chart, because some consultant's going to come into our state and say, hey, you need to own 1%, 2%, 3% of Bitcoin. And if you're not long Bitcoin as a state pension fund, you're short Bitcoin. And you'll start underperforming if Dan and I are correct about this asset. And so those types of things, those rumblings are happening right now. And obviously, I'd love to give Dan's take, of course, but that's what I think is happening.
Yeah, I think that's an important purchase. And I think under the hood, you have other institutions. I mean, I myself have, been involved with that directly. I run the investment committee for an endowment of a school. And I've mentioned this multiple times. And that endowment, we got off zero, which was the, famous Wences Casares rallying point. People in the space know his name. And we went to 1%, and this was an endowment that was $500 million. And we put 1% into Bitcoin and ETH, and then a little bit into venture fund in the middle of 2019. And that 1%, that 5 million, is well north, let's just say, of 50 million. And so you can see we were, I think, the first high school endowment in the U.S. to invest directly. And I think we were one of the first high schools or colleges to invest directly. And it's had a huge impact. And it was just 1% that we put at risk. That was it. And it's allowed us to outperform many, if not most, of our peers. And I think that the ability of endowments to deal with illiquidity risk is very important. I think the worst thing you can do in this space is to attempt to trade it. Unless you have 20 people working for you and in a 24/7, 365 operation. I mean, I managed a portfolio in the traditional world for over 20 years, with daily mark to market and right there on the firing lines at various hedge funds and my own hedge fund. And, this is 10x more complicated, 10x more difficult. There's 10x the upside, but you have to, be involved in the minutia. Or you can sit back and do what I think you should do, certainly, is own Bitcoin, own Ethereum on a 10-year hold, walk away. And the only people who can do that comfortably, I think, are these very long-term investors like the endowment that I've helped over the years. And, like State of Wisconsin, they can put away 1%. They never have to look at it. And so all of a sudden, it's moved into, 7 to 10% of the total portfolio. And of course, I have other investment committee members wanting to sell immediately, right? That's the most difficult thing is, they say, whoa, this 1% turned into 10, we got to sell. And, so it's a battle now on the other end. It was a battle convincing them to do 1%. And now it's a battle trying to get them from selling. So to prevent them from selling.
Okay, I want to react to what Dan said. I want to just say two things. Okay, so this is sort of an unspoken thing. Dan and I have not talked about this, but I feel like Dan and I finally, after 3.5 decades on Wall Street, we finally got the answers to the final exam, our senior year in college or high school, 5 days before the test. Okay, and that's Bitcoin. And so he looks at it probably the exact same way that I'm looking at it, that this is an asset that the world needs. This is an asset that's expanding. You may have seen that the Chinese bank ICBC, the government-owned bank, just put out 2 research reports, one on Bitcoin, one on Ethereum. The bank is owned by Communist China. They're letting you know that they're going to start using and thinking about using these digital assets. Last thing I want to say, which I think is also important for all of this, is that we are still very, very, very early. And what you do when you get older is not when you do when you get younger. When someone gave me a portfolio to run when I was younger, I'm embarrassed to admit this, but I said, I have a portfolio to run. I have a job. I've got to do things in this portfolio to justify my keep. Okay. But as you get older, you look at the portfolio and say, you know what? I'm getting paid not to do anything. I got to sit on my hands and I've got to convince an endowment like Dan has to, or my retail customers, to please relax, let me handle this, and let's not do anything in these positions. And that's a very hard thing for portfolio managers to do. It was something, frankly, I sucked at in the early part of my career.
And you talked about the selling machine of Wall Street. Do you think just the ETF by itself is enough to get us to the next level of adoption? Or how far will that take us? And do you think something else is needed to get us to the next level, which, to realize its sort of full potential?
Well, I'll let Dan tee that one.
Yeah, I mean, look, I think you have the Bitcoin ETF, and then we're going to have the Ethereum ETF. When people try to understand what Ethereum actually is, you can read Antonopoulos' book on Ethereum. It's a bit mind-blowing. Programmable money, smart contracts. You need a different level of understanding. But if you make it through it and you understand why Ethereum is so important, why it's a core asset, you start asking yourself other questions like, what is all of this stuff going on in the space? I understand there's Bitcoin and ETH, but what are layer 2s? What are RWAs? What are NFTs? Now people are saying, well, how could meme coins have $60 billion of value there? What's going on there? People laugh about meme coins, but if you do the work, there's actually something more going on there underneath the surface. And so then what they do is they start looking at the businesses in the space, because there are many of them. And I will tell you, and I say this often, there's nothing that I know with a 99% degree of certainty, but I know one thing, okay? 99% degree of certainty, in 5 years from now, Coinbase is not going to be the only public, large crypto blockchain business in the world. And so what I think happens is that a bunch of the companies that we've invested in start to go public. And there starts to be a lot more M&A, traditional guys coming into the space. We just saw, who was it that just bought Bitstamp? Bitstamp was a second tier exchange. This happened yesterday.
Yep.
It was, who was it, Anthony? Robinhood. I'm sorry. Yeah, Robinhood. And so I think that's just the very, very beginning. You'll start to see these companies IPO, and some will tokenize. That's a whole other conversation. But I think that's the path, really. I think that's the path. And Ethereum, I think, forces this level of inquiry because it's not as straightforward. Let's say Bitcoin to me is straightforward. It's many different things. And actually, in some ways, it's not straightforward, but for the ETF buyer, it is. Digital gold or however you want to characterize it. But when they start trying to figure out how the blockchains work and what are the validators doing on the platform and who are the node operators and the miners, and when you start trying to understand how the Bitcoin network works, then it gets into a greater degree of complexity. Just knowing there are only 21 million Bitcoin, for many people, this concept of digital gold, I think that's enough. But that toe dip that happens with the ETF, that's the first level of inquiry, then Ethereum, then to me, you're going to see many of these companies going public. So that's sort of the next 3 to 5 years for you.
So I'm writing a book right now for the publisher John Wiley. They have this little book series, and so Joel Greenblatt started it. It's called The Little Book of Investing, and we have a little book on hedge funds, a little book on options trading, etc. I'm writing a little book on Bitcoin, what Wall Street knows that you need to know, and I have Michael Saylor writing the forward for me. And I'm putting in the book exactly what Dan talked about. This is the sort of adoption arc. I think we're through the regulatory chasm at this point. I think it's more or less safe to say. I know that there's an election coming up, and Trump is pro-Bitcoin and Biden supposedly Bitcoin, but Trump was against Bitcoin before he was for it. And it feels like Biden is pivoting now closer to digital assets because they did allow for these Ethereum ETFs. But it doesn't matter because the average age of the people that are voting for it, Republican and Democrat, are in their 40s. The people that are voting against it are in their 70s and 80s. So I think we're through the regulatory chasm. Mm-hmm. And I think where we have to look now is use cases, utility, expansion of literally being able to email Dan money anywhere I want in the world. Eric Voorhees, who's a friend of mine, said, we were debating, I guess, Peter Schiff and Nouriel Roubini. He said, so if you want to send money to somebody,
how did you get roped into that?
Because Eric asked me to do it. It'd be like Tapiero. If you ask me to do something, I'm doing it. What do you mean? I mean, even if it's a ridiculous thing like that, of course I'm doing it. Okay, so he asked me to do it, and so I said yes. But what Voorhees said, which I think is so brilliant, is I can email somebody in Russia the money if I need to. I can email somebody in Antarctica the money if I need to. I can email somebody the money in China if I need to. And the money has caught up to the communication, right? So if in 1830 we started the telegraph and we developed the Morse code, and I could send a transmission from here in New York to, say, somebody in San Francisco, assuming the wires are all set up, and it can get there in a blink of an eye, the money always was delayed. It's delayed right now in the banking system, but it's not delayed with this. This is now, we're in the age where the money has caught up with the technology and can be delivered at the speed of light, and it can be delivered in a way that is unbelievably secure. And people need to understand how transformative that is.
Yeah, I mean, that's the invention of Bitcoin, is that it's, the code, it's unhackable, and the proof of work algorithm, of course, supports that. But I think that that's the innovation, that it's completely secure. And that's why digital gold, it's completely, the security apparatus is just unbreakable. But I think there's also something more going on, which is that it's not just money that can be sent. I think all value eventually will be placed on a blockchain. And so there's some things that you don't need the intense security apparatus of Bitcoin. You don't need that to send a $5 transaction when you're buying coffee. There might be other chains that are faster for that, right? The finality of settlement is what's important on Bitcoin. Sometimes if the transaction's enormous, it can take a little while. Like a minute, a little while, as opposed to some of these other blockchains where it really becomes, a second or less or whatever it is. So it's a whole new world. Anthony's right, where the value placement on blockchain has been delayed. But we're there now. And it's just that there's a huge incumbent community, i.e. the entire existing financial architecture that's been built up over the last 50 years. And you can't snap your fingers and have that go to zero overnight. So I actually think, maybe Anthony, you can chime in on this too, but I think there'll be at some point some sort of integration. The old guys are not completely going away. I think that, I think you'll start to see them meet in the middle a little bit, right? Our space, this digital asset ecosystem shouldn't be seen so much as a threat. It's an opportunity for some of the old guys to adapt and, grow their businesses as well. Some of them won't, and they'll go away, and the smart ones will. And I think we're at the very beginning of that phase.
Well said.
And how does that relate to, if you look further down the line, how does that relate to the US dollar? Do you see a world where they coexist, Bitcoin and the US dollar, or?
Yeah, people should stop with that. The dollar, there are 125 other currencies that will go to zero before the dollar. So the dollar is the supreme currency and will continue to be, certainly for a very long time, in my view. I mean, it's achieved network effect to such a degree, it's almost to the same degree as gold. I mean, gold is something that, every single person on this planet, no matter how poor or rich, no matter, where they're living, everyone knows what gold is. And just a little behind that is the dollar. So I'm not worried about the dollar. I think, look, Bitcoin is of limited supply. And yes, over the last 10 years, the dollar has gone down 99% against Bitcoin. But just understand this, every single asset that exists in the world has gone down 99% against Bitcoin, right? If you do that chart, Anthony and I have talked about this before. So it's not about the dollar going away. It's about investing in an asset where the supply is limited, that is a unique asset that is at the core of the entire digital asset ecosystem, the entire digital asset world. So that's something that's very valuable, and that has achieved network effect already. So, but is the dollar going away? I wish people would stop talking about that. I had this conversation with Tim Draper a few weeks ago. I'm like, Tim, just rein that in. The dollar is not, he says, within 7 years, I could see the dollar going. Dollar's not going away. It's just Bitcoin is an alternative, right? And maybe at some point, 20 years from now, the dollar will be the alternative. I don't know. Or maybe, people like to have choice. And look, it's no surprise that the invention of Bitcoin came about after 2008, the crisis in '08. Many people felt that was not handled correctly by the U.S. authorities. And there was extreme quantitative easing, extreme increasing of the money supply. And people said, you know what? Look, we like gold. We think that's limited supply. Even, 1% a year of supply is increased to the gold supply. Okay. But you know what? We'd like to have something that had a mathematical equation backing it where the supply could not be increased. And so there's no mystery as to why in October '08 and then in '09, why Bitcoin was formed out of that period. So that's what it is. It's an alternative. Could it possibly come to dominate all value in the entire world and everything of value move to that? I mean, even if it did, take a look at the stablecoin market, right? That's fiat currency that's backed by a digital representation, digital tokens, mostly on the Ethereum network. They're huge. 4 years ago, there were 0 stable coins. And last year, I think it was almost $10 trillion of stable coins were settled. 10 trillion. How many things do you know of in the world that go from 0 to 10 trillion in 4 years, right? The opportunity in the US is for the US to get more involved. All those stable coins are dollar based, right? We don't even have euro or yen. I mean, it's tiny, infinitesimally small. I think all currencies eventually you'll have stable coins for. Why is there only dollar stable coins now? Because that's the demand, right? So you can't tell me, is the dollar going away? It's not going away. It's just it'll be represented digitally. It already sort of is in the old world, but the way it is in the old world is not yet fungible with everything that's in the new world, because the old world is not residing on blockchain.
Anthony, I assume you along the same lines?
Yeah, I don't really know how I can say anything that's more powerful or more insightful than that. So let's go to the next question. I think that was brilliant.
Anthony, we've mentioned, obviously, we talked about Bitcoin. Dan also touched on Ethereum, meme coins. I just wanted to know if you think there's value outside of Bitcoin, and if so, how do you value those opportunities? How do you go about assessing them?
Okay, so for me, we have my partner, Brett Messing. He's a Bitcoin maximalist. Then I have my partner, John Sfoulos. He's a Ethereum maximalist. Okay, so these guys are all very different. And so I happen to feel that there's room for these things other than Bitcoin. I see Bitcoin as money, and I see these other things as rail systems where you can contract on them and move contracts back and forth between each other and potentially tokenize assets on them. And so the question is there room for things like Ethereum and things like Solana and possibly others? I believe that there is. And I do believe that we'll be sitting here someday. There'll be a stable coin. Maybe it'll be a Solana-backed stable coin, or you pick the layer 1 technology that the stable coin sits on that we end up transacting with every day in every which way. It's literally sitting in our wallet. I predict that my grandchildren will not that they won't have access to it, because I still think it'll be with us, but they won't need paper money in their pockets. And if they want to tip somebody, they just take out their phone and they go like this and tip somebody as they're giving their car to the valet, or if they're, there'll be a scanning thing in a hotel. You can leave, 30 pounds in the hotel for the maid, just by scanning. And I think that's all coming. And so the question is that going to be done on Bitcoin? There are people that think that's going to be done solely on Bitcoin. I'm a big believer in a broad marketplace, and I'll just take you guys back to operating systems. When I started on Wall Street, there was the OS operating system from Microsoft, MS-DOS, if you will. And then there was the Apple operating system. And then we had VA Linux that was developed, which is sort of an open source operating system. There were a few operating systems. And so you could have been an operating system absolutist, but in reality, there's a few things that are going on. It's a big world. So yes, I do think there's room for other assets. I do think there's room for what Michael Saylor would call digital property. Although he's a Bitcoin maximalist, he believes that there's only one. When he hears me talk about other assets, he calls and yells at me and he lectures me. He tells me I'm wrong. There's one asset, it's Bitcoin. But truth be told, I do think there's room for others.
Thanks, Anthony. Dan, same question to you. How do you evaluate opportunities?
Look, I've always thought this. it's funny. I said recently in my investor letter that I'm a Bitcoin maximalist that believes in a multi-chain future. So what the hell does that mean? That means that
I actually get that. Actually, I actually understand
so
that.
I mean, I think that the core asset is Bitcoin. Bitcoin is the collateral for the space. It's the pristine, highest quality AAA collateral. If you were going to look at it in terms of credit, in that within through that prism, I don't. But I'm just saying, if you're trying to think about it, and other, I think the borrowing and lending, for instance, market is something that I think will become huge. If you have an asset that's pristine collateral, you don't want to sell it. I think the borrowing and lending business has never been, this is sort of the perfect business for it, because most Bitcoin holders don't ever want to sell. So you've got the example of the 29-year-old kid who's got $7 million worth of Bitcoin in his wallet, and he's living in his grandmother's basement because he doesn't want to sell any to buy an apartment. So what is he going to do? He's going to go to a company like we own called Ledn, L-E-D-N, and he's going to borrow $1 million against some of his Bitcoin. He's going to buy that apartment. That's unlike anything that I've seen before. When you own dollars and when you own assets, you sell a little bit to buy yourself a home, or you got to eat, right? You got to have a car, you got to do basic things. But Bitcoin holders don't want to sell ever at some point, but many don't. And so I see Bitcoin as serving that purpose. I don't think a lot of the other cryptocurrencies are collateral. I would not lend, as a lender, I would not lend against many of these cryptocurrencies. There isn't the liquidity, there isn't the network effect achieved. They're still like searching for use cases. Look, Bitcoin and Ethereum are the core assets for me.
What is the on that company that you own? What is the loan to value for Bitcoin?
I think that it can be like it's extremely conservative. It's like 1.5 times. So, but
okay, so if you have 15 million Bitcoin, you can borrow up to 10 million.
Yeah, but I don't know if the number is 10. But yeah, the answer is yes. But it's also adjusted based on size, based on who you are, But Ledn is the only company, the only CeFi lender that survived the entire, debacle of 22, 23.
And just out of curiosity, what can you earn on that?
It's changed. I mean, it's a lower number than it was. So, I mean, it really changes like almost weekly. That's why I don't want to quote anything. It's easy easy to get a live number. I can send you something after the show.
No, I'm just curious for people out there, because I think a lot of people don't realize that there's still lending opportunity on Bitcoin. And so if you needed evidence that Bitcoin is money, Ed, listen to what Dan is saying. You have people that will lend on it. It's a hard asset that people will look at and analyze and say, okay, right now, if I put my US dollars in the bank, it's not a great interest rate, but Chase will give me money on my dollars if I put it in a savings account with them.
Yeah.
What Dan is telling you, he has companies that he's an owner of that will give you interest on your Bitcoin. And so if you need evidence that this thing is money, you can't get any clearer evidence than that. That's the only reason why I'm asking the question.
I'll get back to you. I haven't checked in several months. That's why. But I'll tell you this. They were, stressed as a business a year and a half ago. And in Q1, their revenues exploded. They actually became profitable. So net profit.
Yeah,
I mean, in this space, you have,
I'm sure there's a nice spread on the lending.
Right, and they're very professional about it. And I think that's where the two worlds come together. It's the professional, behavior, demeanor, the corporate, bringing corporate governance, etc., from the old world. I think that's what we can teach the new world. The average age in this new world is 28 to 30. A lot of these guys don't have the experience They haven't run legitimate large companies before. They run into problems with, managing even basic things like managing a board. They haven't done that before. How does that work? Compliance and all these things that help sort of legitimize and provide comfort for people coming into this new world, because it's not easy. It's definitely not easy. Your question was really about other use cases. I mean, we could go on about that for quite a long time.
Do you think it will impact industries beyond finance, or is it largely related to finance?
No, I think finance is the fastest and early use case. But for instance, I mean, Anthony was mentioning contracts. I think, one day and this is often talked about, commercial real estate, there are 17 different steps between the buy and the sell. You will be able to just, as Anthony showed, put up your phone and you'll have your, you'll wave it into someone else's phone and you'll have sold your, $200 million, property. So I think that as a ledger of permanence, right? As a ledger that can be trusted, that's decentralized. There's tremendous application to all sorts of parts of our lives. I mean, I was reading the other day that the state of California is putting all driver's licenses on the Tezos blockchain. That's pretty interesting. I'm not sure why they necessarily chose Tezos, but as a record, the digitization of it's not just identity, value, IP, all of these things, I think eventually will be placed on the various blockchains.
Yep. How quickly do you think this will occur, this sort of transformation of finance?
It's all happening now. In 2019, when I first sort of reapplied myself to the space, I mean, we had none of it. Think of something even like stablecoins. Stablecoin volume was zero. So there's been a huge, that's the obvious thing that should be digitized first.
Easy use case.
Easy use case. Then you have companies that we own like Helium and Nova Labs, which is sort of the poster boy for DePIN. I think that using token incentive mechanisms to get business done in the real world, I think there's a huge use case for that. Providing people, selling people product and then having them benefit in the profits of that product through token ownership, that applies to almost, everything out there. And that's really, what's really, I think, going to take off in the next sort of 3-4 years.
Yeah. Thanks, Dan. So, Anthony, how could people approach incorporating Bitcoin or Ethereum into their portfolio?
Well, obviously, the simplest way with the Bitcoin, obviously, is through the ETF. You could also do that through eventually through the Ethereum ETF. But here's the thing. The money, particularly in the United States, is still in the hands of the baby boomers. And the baby boomers now, the last of the baby boomers are now 60. And so I just want you to imagine this big bubble of people demographically that are age 60 to, let's call it, 80. And that group of people owns the money. They're used to buying things with what are called QSIP numbers in the United States. So meaning there's a security number. They can purchase the asset. It goes through the Depository Trust Corporation and into their accounts. And then they can look at their accounts online or get a statement mailed to them at the end of the year. And so the preponderance of the money is going to flow into these assets, in my opinion, long term, are from the people that have the money. And so this will be institutions or high net worth individuals that are in that baby boomer bucket. And I would say that if you're peeling back the onion of reluctancy, we're through several layers of the onion and we're getting to the core of what I would call acceptance. And so, what Dan's talking about in terms of adoption and use cases is happening simultaneously to people that are my vintage that are saying, you know what, I got to get off zero. I got to go from zero to owning some Bitcoin or owning some Ethereum. And the way to do that for somebody my age, frankly, is to call their broker and say, hey, could you buy this for me and put it in my portfolio?
It's just as easy to get a Coinbase account or a Gemini account or a Kraken account.
Yeah, it is.
Look, it may not be as simple, but it really is simple. And I would really encourage everybody to do that, to not just buy the ETF, because that opens you up to everything. It's just the easiest.
I know old habits die hard. They die hard, Dan. And so somebody has a Morgan Stanley account or a Goldman account or a Merrill Lynch account. Old habits die hard. First thing I did was open up a Coinbase account. I opened up a Fidelity digital asset account, and I went through the process so I could own these things outright. I do own the BlackRock Trust in one of my stock accounts. But I'm just saying, it's there now. You can get it, and it's easy and it's accessible. And this is another reason why I think the prices are going up. And we've left out of this whole conversation the fact that the network has cut its supply in half. Again, I'm not talking about the supply of Bitcoin in general. I'm just talking about the daily supply that enters the marketplace as a result of the halving is down to 450 coins per day, down from 900. So that's almost like think about it this way. It's almost like a 450 Bitcoin share repurchase, if you think about it from that perspective, starting in April. So supply is constrained and demand is going up. That usually spells good things for price activity.
And how should people think about asset allocation in their portfolio to something like this? Related to what they've got in stocks and things like this?
Look, I think at this, you've got to have 5%. It used to be 1%, but it's growing too big, or somewhere between 1 and 5, depending upon what your comfort level is. But and then again, as Anthony said, you dip your toe in with Bitcoin and ETH. I tell every prospective investor in my funds the same thing. You decide you have some Bitcoin and ETH, you have a little bit in a venture fund, and then you have some in a growth fund, which is us. And you have those 4 exposures, and you decide what percentage, how you want to break down between those 4 things. You come back in 10 years, and I guarantee you're going to be very happy. And there are very few things in life where you can say, especially investments, oh yeah, just put these 4 things on, come back in 10 years and you'll be fine. I don't know that there's anything else I could even talk about like that. I think stocks should be fine in that, but stocks have protracted bear markets. We didn't go anywhere for 15 years, between, 98 and 12, essentially. I don't know. And many of the tech stocks that are high flyers today, I think Amazon was $6 for years and years. So I'm just saying that very few things in life can you really say that about with conviction. And I think this is one of them.
Well, I guess the thing I want to say to Dan is, you holding your Bitcoin?
Of course. What do you mean?
Okay. In 10 years, will you be holding your Bitcoin?
I don't even think about it. It's it's not even on my anywhere.
Okay. These are leading questions I'm asking, Dan, Ed, because I'm trying to point out that there's a group of us that are holding our Bitcoin. It would be the last asset that any of us would sell, God forbid in a calamity or something. I'm just talking about this would be the last asset.
I don't even think about it within my portfolio. Like it's out. It's not even right. It's outside. The problem is thinking about it. If you start to think about it, and and if you've been in for a few years, you get very tempted. So So I don't think
Yeah,
about
well,
it at
no,
all.
it becomes a large amount of money. But the point I'm making is you have to create self
Yeah,
immunization from your
yeah.
emotion around the
It's
asset
very
class.
hard if you don't have that
Okay.
experience.
Yeah, well, that's it. It's very hard. But, if you're 35 years on Wall Street and you've seen a lot of things come and go, you're getting paid right now. Let me rephrase it. SkyBridge, me, we're getting paid right now to sit on our hands. I know that sounds crazy, but it's a very hard thing for people to do. And it's worth paying us that because we'll keep it safe. And if you listen to us, you're going to be well rewarded. Way more than any of the friction that you could create for yourself by spinning things in your portfolio.
It's probably good point to end on, and I think that's a lesson people can take away from this. Is really knowledgeable. Thank you, Anthony. Thank you both, Dan and Anthony, for your time today. I really appreciate it. It's really good to get your insights, and I know our audience will benefit a lot from it.
Great to be on with you both. All right, guys. See you soon.
See ya.
Dan,
See ya.
see you, babe.